Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on the tech sector, and there was some unusual activity in the tech sector today, and it was a correlation or a break in the correlation that we are used to in 2017. This is the first time I've seen this discrepancy, and you can see very clearly XLK, the bulls were in full control, follow through to the upside. All-time highs, almost a green Marabozu, big bull volume, and a close at the all-time high at the high of the day. So pretty much cannot have a more bullish day in the tech sector. It's one of the more bullish days that we've seen in the past 3 weeks. But the high beta tech names, and I'm talking Apple, Facebook, Amazon, Netflix, all were laggards today. There were points where all four of those names were between 0.2 and 0.4% to the downside, while the tech sector was in the green by 0.3%. And that is very unusual. And Apple was the leader. Apple made a bull move early in the morning. Amazon and Netflix were laggards and followed along. And then Apple fell apart and hit a new low of the day. And Amazon and Netflix followed along to the downside there. So normally I would expect it, or I would call it sector rotation. But clearly money is not leaving the sector. So money is leaving the sector leaders and heading to the smaller names. Now NVDA has been having a huge week of trading in a row here, but NVDA holdings in XLK are 1/10 of the holdings of Apple. So there is money moving around the names in the tech sector. It's clearly still bullish in the sector, but it's shifting from the sector leaders and these big names. So XLK, full control of the bulls, all-time highs, 4 weeks in a row, closing at the high and starting off this week with a really strong follow-through move. And this momentum is just astounding and continuous. So Apple is a bearish candlestick. It's a bearish little spinning top, almost a doji, and it's not a very bearish candlestick, but just again, compared to the bull candlestick we saw in XLK, this definitely stands out as notable. Something's up. So we're looking, if we break the low of today, tomorrow, 155.05, there's a little gap here at 154.07. That will be our target. So I'm going to be watching like a hawk to see if this correlation keeps up, and to see if there is a disconnect from these major names and XLK again tomorrow. All-time high, new all-time high resistance is 156.65. So keep that in mind. A lot of these names, Amazon and Netflix and Apple, they all hit all-time highs today. So it's all relatively speaking. We're not weak at all on the daily time frame in any way, shape, or form. It's just a little bit off to the correlation of what it used to be for pretty much the past 4 or 5 months. So Apple on the weekly time frame, nothing to see, very tight range, 4 more trading days of action. Again, I don't put any weight into the candlestick shape on the weekly time frame until about Wednesday. I'm just looking at the moving averages and the Bollinger Bands, and we're sitting right in between both of those, so not much to see on the weekly time frame. So Facebook, we got a bull break of the inside candlestick on the daily. As soon as 150.46 broke, that was a bull signal, and we ran up over $1. And obviously those gains did not last, but what it does give us is a position to either take short-term profit or worst case scenario to get out break even, because the signal was at 150.46. Even if you make a late entry, you're in at 150.60, and from there we see, you know, an 80-cent move to the upside. So that is a scenario where you absolutely want the worst case scenario to be a stop out at break even if the worst case scenario happens today, which is give back all those gains and close fairly weak. So what happened here is we have a new lower high. We have our high, low of consolidation, lower high, higher low, lower high. So the range I'm watching right now is 148.86 and 150.148. We're right in the middle of that range. Middle Bollinger Band support is catching up to act as a bit of a safety net. And the weekly time frame is working on another inside bar. So normally I would say this looks like a bull flag, but because I know it's inside bars and higher lows and lower highs, it's more of a pennant or a triangle. And we're going to be watching for a break of this range. Might not occur tomorrow. Very, very likely to occur this week. We had a nice trade signal first thing this morning, just looking at the past couple of days of tight action. Now we're looking at a more broad scope of a tight range of action and waiting for that break there, and it will result in a break on the weekly as well. The overall prevailing trend, as well as the sector strength, as well as the market strength, has more likely a bull break than a bear break, but I always like to wait for that break to ensure that momentum is in our favor. Just like today, momentum puttered out, so we want to see a bull break and a very clear, or we actually want to see any break. I don't care what direction it breaks. I'll play it bullish or bearish once we see a break of this range. So I appreciate you watching. I hope you have a great night, and we'll check back in tomorrow. Keep an eye on those correlations.